Welcome back to Hedge Heads, brought to you by FM Bank. John, I heard we maybe want to brag today.
Yeah.
I mean, let's keep it humble.
Yeah. Yep. What we've been talking about for 6 months on the podcast is happening. So that's not the important part. We just wanted to point that out. But now we need to get to work. Now this is where the rubber meets the road. We're going to talk about December 27 and ideas there. We're already getting ahead of the curve. We're going to go over how to re-own corn, a bunch of stuff today. So definitely tune in.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I know that you are just shocked by the price action in corn right now.
Oh, yeah. It's shocking, other than we've been talking about it for the last 8 months in a row. Not to rub it in, but that's what we have been talking about. I think I said don't cap your upside in this market. But that's all well and good. Where do we go from here? We spotted the corn market a long time ago. The weather wasn't cooperating. We said it wasn't cooperating. The market even traded that for a while.
And before we brag, when you say a long time ago, like we definitely were talking about it too early.
Yeah, but that's not necessarily bad for planning at all. And the main message we were trying to get out is do not be marketing 460 to even 490 corn. This is not the market for that. The demand base really was where it all started. When you get a demand base like this, you get markets like this with one tiny bump in the road. That's the only thing that we didn't know was going to happen. Then it started getting hot and dry. And, what I find amazing is that everybody somehow mainstream went along with this is going to be 184, 185 until literally like a week and a half ago. Yep. Everybody, and then it's something, maybe it's new, but this also I was talking to one of my clients, and it happened in 2012 where the attitude was really poor. It was the one drought year we had, and they were really bearish. The funds had driven it down all the way till the end of June. And this one is actually very similar. To say that it never happened, it actually did happen this way in 2012. And it really is a sign of the times. It's momentum. These guys had built up a large position in the funds, 300,000. Then they dumped it all. It dumped 80 cents in 2 weeks for absolutely no reason at all, other than it's just fun and games. Where I think guys were lost is that the last 2 years were bearish, so they feel the need to market early. And we'll quit talking about the past because that doesn't matter. Let's go to the future.
Yeah,
this problem's happening again. I hear December 27 talk, quite often. Now, I'm not here to talk a guy out of marketing a profitable price, but there's other ways to go about it than just marketing December 27, locking in those prices. And you really should focus on, if you think December 26 is topped out, or March 26 or May, then that's when you would market. It's going to follow the front. Of course, it's going to get more inverted if it gets bullish, but let's not get ahead of ourselves. This thing is Pro Farmer's numbers. This is not the USDA's numbers. There's a million moving parts to this thing. They can add acreage. They can walk down the yield. They can raise yield in the next report and then lower it in the October report. So let's say we just go up a bushel. Just for argument's sake, everyone's going to say it's not out there. But this is the USDA. These are these reports. You can't say that it couldn't happen. What if they add 1 million more acres? What if they add 3 million more acres like they did last year? Then this thing's already overblown. So my point is there's a million moving parts to this thing. There's no way to know what we have out there. We're in a bad spot. We've been in a bad spot. North Dakota's bad. South Dakota's bad. Parts of Minnesota are bad. And we've known about this forever. And it didn't look like it was possible to be anything like the last 2 years. But beyond that, we still don't have all the final numbers. As a matter of fact, we haven't even seen the USDA's yield number yet. We saw the farmer survey number, but we haven't seen the USDA's number. So we don't have all the pieces of the puzzle. I'm more in the camp, for December 27 corn, if you have to do something, a 630 call is like 19 cents. Now, is that a hedge? It is not a hedge because it might not get to 630 and be a hedge. But if it doesn't get to 630, You get 19 cents in your pocket. So I'm more erring on the side of caution. Where would I mark it for December 27? And, if you sell a 630 for 19 cents, and definitely not a recommendation at all, your first sale is going to be right around that 650 mark for December 27 corn. So why are we talking about December 27 instead of December 26? Because we know the numbers for 26 to some degree, and it's supportive. So now, in order to capture these gains, you're going to want to start looking ahead and thinking ahead. December is going to attract a lot of acres next year, and it's going to need acres. But, beans have fallen out of favor, and when the corn, so what you want to do is keep your eye on the soybean corn ratio. You have Trump with China, and you have stuff that can make beans go down, and beans didn't have nearly the bullish report that Pro Farmer had out of the field on corn. So guys are already saying, why was there that major difference between beans and corn? The bean plant can take a lot of heat. It very well might be that's representative of what's out there. It also might be their corn numbers are wrong. It might be their bean numbers are wrong. It might just be a wonky year where the Pro Farmer Tour is not very reliable to what's out there at all. And that's kind of what I was back to my point.
You also, in beans, like just watching the price action, you have a lot more speculation in there. The fund moves, the biodiesel news, the things like that in beans.
Yeah.
Beans have had a bid under them for a long time.
Yeah, and we saw basis improving, steadily throughout the late summer, which is a great sign. We haven't seen that for a couple of years. So there are signs that the bean market could even be tighter than 325, where corn doesn't have that. Basis was bad, stayed bad, sort of gotten a little bit better, but this is no 2019 where basis was good for 2 years before it took off to 740. So, where does all this fall? What should we do for marking? Mark it incrementally on the way up, which a lot of guys are. A lot of guys got way too aggressive, way too early, and I don't know why.
I don't blame them if that was profitable numbers.
Yeah, hindsight's easy 2020, but we had been talking about not doing that for 6 months.
Yes.
You know what I mean? Like, again, it's the fine line between talking a guy out of a profitable price and then having an unprofitable price. But it's another thing to have bullish fundamentals and marketing really low, which is exactly what we had. Even though the mainstream people weren't saying that, which leads me to one of the major problem guys have is listening to the wrong people.
Yeah, well, and the psychology of it too, because here's what I have seen happen over and over, and I expect it to happen this time too. Everyone's bearish, so they market it early. I'm generalizing with everyone and they, but in general, people are bearish, so they market it earlier, and now the price is better. So now that the price is better, now they say, I don't want to do something, for instance, the call you were talking about, because they got burned on this one. And that's the cycle that you've also been talking about for the last 6 months. So you got to break the cycle.
Yeah.
Like, now is the time to look at what just happened, but also know we're going to attract more acres at these prices. We're going to, there's all these things that can happen. We might not have the same weather.
Yeah, you have to be forward looking. That's why we're talking about December 27, because that's how you market better. We haven't had a year like this where you needed to look at that. You know what I mean? It's been this really low price in front with a lot of carry in the market that gets us towards 490 for next crop, which is a readily available price. All spring into summer has been a pretty not a common price, but it's gotten there every year, no problem. So now we need to concentrate on 27. So if you want to keep the good times rolling, like Ryan was saying, you need to break the cycle. So that's why we're tracking 27. That's why we're starting to look at 27 opportunities. And if you didn't do anything and you're unmarketed, you got lucky with 26 and great. You're in a great position for 26 and 27. But how you handle it from here is going to separate the men from the boys. And again, you're going to want to start getting better information. And again, not to toot our own horn, if we didn't have it backed up, you can go to the website and see what we've been talking about. Believe it or not, there's information out there and good numbers. And, I try to follow that myself. And these mystery moves that seem like a mystery aren't actually that mysterious. Of course, it's never easy. There's a lot of, like I say, moving parts to this. This could have been 186 and it could have been another muted year. But when it didn't start good and it wasn't good the whole summer, I just don't see how there's a huge excuse to say you couldn't see this coming. Like, it's one thing for the weather to be good, and it's another thing for the weather to be what it was this year, which wasn't good at all. The mystery was why everybody kept saying it was good is just it happened in 2012, and it just happens that way sometimes. Where I guess in the East, where there's the population and all the smart people in the big cities live, it was raining, and it probably something just as simple as that. Where the people out west, where you have 10, 15 miles between neighbors, there's just simply not as many voices out there as there was.
Definitely have backyard bias. I mean, that's common.
But again, this is what we do. We're hearing these tales on the phone from every direction, from every state. You get a report on the ground. Of course, it's not going to cover the whole state. A guy calling from Indiana is not going to be the whole state. But you get a very, after how many years I've been in the business, over 20 years, you get a very good network, and you get very good comparable stories one year to the next, almost similar to a pro farmer tour, where it's not like the last 2 years, and then you start planning from there. And that's kind of what we did here. But then you throw in Iran and all the rest of this stuff, and it's not like it's easy. Like, it's never easy. But my point is, there's definitely numbers out there, if you know where to look, that do point to stuff like this before it happens.
Absolutely.
And we were just talking about beans. Exactly what we were just talking about. You're seeing symptoms of that in the bean market right now. You see the 325 number, but you're seeing better basis than you would expect, with the numbers that we have. You're seeing this constant bid under beans. You're seeing things, and you have to do your own little detective work to kind of try to figure it out. But it is out there. Just know that there's guys that have learned, and they know what to follow. And it isn't complicated. It's not like 5 gurus that you follow. It's just simple USDA data, trying to figure out where it's going before it gets there, that kind of stuff. A lot of years there isn't a lot there, but some years there is, especially when you have a demand base like this. So back to the markets. Where do we go from here? What are the popular calls? Guys wanting to get long corn now, which to me is a little bit of a warning sign, because it's moved so far, so fast, well before we know what the real USDA's numbers are. So now you got two distinct camps. Like, this is way worse than anybody could even ever imagine. This is going to $7. And then you have the other guys saying it's ahead of itself and we don't know the numbers. I'm kind of in the second camp more than the first camp. Basis has been bad. It's probably going to improve quite a bit this year. Still, there was a supply out there, and there's going to be another big supply coming in. So what are some realistic targets? 550 is a number that's being tossed out quite a bit for March. Very realistic target. 580 is another one that's being tossed out by a lot of guys. Very realistic target. 6+, now that's where it gets interesting. You're going to need some more news than we have right now to get to 6+ and sustain that, because it would have to be a supply issue way lower than what we know now. Because in order to get demand above $6, there's got to be fear there's not going to be enough.
Or more activity in Ukraine.
Yeah, we don't have that.
Ukraine could keep going.
Or it could go the other way, where they're shipping corn in and wheat out. So it's like I say, there's a lot of moving parts. You take it day by day. To me, it's overpriced. So how can you get involved long corn here? There's a number of different ways. You have buying futures, buying a put to protect it in various time frames. For me, I think the most critical time frames are going to be the USDA reports. So I'd be interested in, like a November time frame, maybe. Possibly
Remember,
December.
the easiest way to be long corn is to grow it.
Yeah, grow it. Yeah, there's going to be plenty of guys, and then
they're all long corn.
They're all long corn. They're always long corn. Right. But if guys want to cover sold bushels, stuff like that, maybe they sold too low. So let's figure out some answers and solutions to the problems we have, and that would be, like I say, buying futures, buying a put. Why would you do that? Well, if you give up 15 cents for a put, you have protection to the downside, but you have your upside wide open. So whatever it goes up, it would be let's say it goes up $1 from here, $1 minus 15 cents that you spend on the put. That would be one way to approach it. Another popular way would be selling puts, like selling 30 cents out of the money, turning around and buying a 20, 30 cent money put out of there. A call out of the money. So you're selling a put to use that money to buy a call. And there's a lot of different ways that you can do that. You can just simply buy futures, cover sold sales. Of course, that's the most risky. So there's a number of different ways you can get involved in here. What if I haven't sold? What do I do if I haven't sold, but I'm afraid it's going to come off from here? Do I run out and make sales right now?
You sell calls each month.
Yeah. Here's where it gets fun. Finally, we have enough margin now to start doing different hedges. We haven't had this in 2 years. So you could simply buy a November 520 put for 20 cents, get through most of the reports, not all of them. You're not going to get through all of them. That's going to give you a lot better idea. So why would you do that instead of just grabbing 520 corn? Well, this is where you decide as a producer, do I want to give up a little bit of the bottom line to see more information, or do I just want to take 520? So if you buy it, let's just run through a guy that buys the 520 November put for 20 cents. And I don't even know if it's at 20 cents. I think it was around there. Just for easy math, let's use this. So at this point, you've locked in $5 futures all the way through the third Friday in November. What do you get in return for that? You get to see what the USDA reports are in September, October, and I do believe it catches the November report, if I'm not mistaken. So you get to see 3 USDA reports at the very minimum, 2. Now, why would you do this year and not a different year? Because these reports this year are very important compared to the last 2 years, where we knew it was good weather, we knew it was a big yield, and there were, as it was coming in, there was no surprises. So why would you waste 20 cents when it looks like, when you don't need to? This year, you're giving up 20 cents to see possibly if this could go another $1. Now, what happens if it's bearish and it just goes down from here and that was the high? Well, the guy that sold at 520 was the guy that got more money, and the other guy that bought the put got $5 instead of 520. What's smarter to do? What's the better answer? No one knows, and that's the point of hedging. No one knows what's the better answer. For me, if I was a producer in this situation, without a doubt, I'd be looking at puts. But that's just me and my mind, because I want to see what this thing can do. And then there's going to be a guy that's like, let's see what this thing can do. I'm not going to buy any put. I'm just going to let it rip. That's an attitude, too, that you can have. That often doesn't work, having that attitude, that I'm just going to see what it does. Like to your point, this thing looks like it's going to go to $6. Why would I do anything? That's burned a lot of people in the past, too. So what I'm trying to get across is...
Let's be clear, though. Because a couple months ago, and I do want to point out that my saying sell calls against stored bushels is not a recommendation, but you should call us and ask about it.
Yeah.
But we were saying sit on your hands. We said that this spring, that there's definitely times to sit on your hands. What you're saying is now is not the time to sit on your hands, most likely.
We said so little about marketing that we lost subscribers on the Insider because we simply refused to put stuff out there just to put stuff out there. We said we don't think this is going down until the Iran situation's resolved, and then the weather started getting bad. Could I send more updates out? Kind of saying that, yeah, but still. I'm a big believer in not putting too much information out and just putting important information.
I'm just pointing it out because right now you're saying doing nothing is a bad idea. Rarely works. Rarely works is important because this spring into June, we were saying do nothing.
Yeah.
I just want to point out there's time, and we're going to tell you straight up when we think you should do nothing and when we think you should do something.
And when we say do something, it means be talking to your advisor and banker. And then if you don't really have that, that's the first step. You need to solve that. You need to find really good guys. And if you're lucky, you'll find really good guys, but you need to seek that out. Because they you farm and you do a lot of that, and then there's a lot of bad advisors, a lot of bad brokers out there. There's a lot of bad information out there. But what you want to do is start getting better information coming to you to make better decisions. And again, that's why we're talking about all this. We're getting to markets where you can't just sit on your hands and just think about it. This is where true problem solving starts to come to fruition. There's combinations here. And there's a lot of different things you can do and a lot of different outcomes. And you just simply need to choose what's best for your operation and farm. Just like what we were talking about. Is it better to buy puts and see what these reports say? Or is it better for my operation to lock in 520 corn right now? What's best for you? And, there is no solid answer. There might be a huge farm at 520. They're going to make more money than they've made in the last 5 years. and they're happy with it. There's nothing wrong with that. There's going to be other guys that, backs against the wall. I could use a lot more income this year. I'd rather give up 20 cents to the bottom line to see what this thing has over the next few months. But I still have my protection and my guarantees in place. So that's really what it's about, not telling guys what to do, because everybody's in a little different situation. And this one's not obvious. We don't know where we're going here. We haven't seen near enough numbers to know anything. This could go substantially higher than people think, or it could be topping out soon. Again, we just haven't seen the numbers. I'm in the first camp where this is probably really turning into more of a bull than people realize because of all the world events going on and the reports out of the field. Like, there's enough evidence now from every direction that this isn't what they thought it was, and the heat does look like it hurt it. Where we don't have that in soybeans, though. That's not something that's been confirmed at all in soybeans. It's feeling like it's starting to be a pattern in corn.
Can we talk about what the you think this can be more of a bull than you're hearing or than other people are saying? But let's define that too, because I think a lot of times you say that and people instantly jump. We're going +7. We're going to 10. Like 10 is out there.
Yeah.
$9 corn, we might see it. Like,
great question.
You're just saying
great question.
It's bullish, but
it's based off the numbers that are readily available. Without any guru or advisor, you can get these numbers from the USDA online, no problem, anytime you want. It's based off simple math. Like, we're using X amount and we're producing X amount, and it's quickly going the wrong way on the supply side of stuff for the demand base we have. And that's an important distinction, is like, it wouldn't be the same market without the demand base that we have. You could have a problem, like go back a couple of years ago, you can come off 5-6 bushels and you're not going to $6. Where with this demand base, the numbers that we're using right now from the USDA, this thing could go substantially higher. So that's an important distinction. I do gloss over that because we're looking at the numbers and talking to guys about that every day. And I kind of forget not everybody, that's listening knows that. Like, so it has more potential because of the demand base versus what we're growing this year. We grew a lot of corn and we're going to have a lot of production, but it's that demand. And that's back to why we were saying, do not limit yourself on this one, because the demand numbers were breaking the needle in every direction on this thing. And the margins were substantially better than they've been in the past, which would lead one to believe that the demand numbers are going to stay the same. And that's exactly where the turning point for this market is going to be. When you start seeing the demand numbers going down, you start to see the cracks in it, then that's where we're going to be marketing on the other side. So the fundamental numbers do matter. They don't matter every day, but they matter.
The other number that matters too is where we can top out. We're still producing. Just because the numbers are lower doesn't mean we're not producing a ton of corn this year.
Yeah, it's an unusual bull.
So it's not the potential high upside is limited because we're still producing a ton of corn.
Yeah.
And if demand does start to go away, now the top end gets even more reduced.
Yep. And
so you need to watch those things. Those are all factors that factor into where we think this can go. So just saying bullish doesn't mean that we're saying 750s in the cards or something like that either.
You have to see how demand reacts to it. We're in a good position, though. In back to, let's take a deeper dive into the numbers. Argentina is going to be about the only reliable corn for sale right now, where in other years there might be multiple sources. Ukraine might have had a record crop. Right now they're putting the holes in the side of ships. So we don't know what's coming out of Ukraine. We got to assume that we're going to be the demand base for the world, even at a higher price. And that's another important point, is that in a different year, if we go too high, we might get above Brazil's crop and lose, all that demand. We're not in that situation. That's why this could go substantially higher than people think it could go, because of the world corn supply situation more than anything else. They were counting on us to have another bin buster 3 years in a row, and if it didn't happen, we were going to go higher. So that's what's happening right now. So watch the numbers, watch the demand. You don't need to watch that every day, but you'll get a feeling for when we're getting overpriced. And what is overpriced now? inflation's roaring, margins are good on all the processors, so we're not even close to that problem yet. So what are processors going to do? Are they going to say this thing's overheated? We're going to go hand to mouth like we've been going the last 2 years? Or are they going to say we need to get some of this locked down and we need to get going right now? And that's where I struggle short term is what is going to happen there? Are guys going to flinch on the end user side, or are they going to wait and see? Seeing what time of year it is, and there's going to be a large supply that needs to go somewhere, as there is every year, I would say they're going to be more hand-to-mouthy. This is a fund-driven deal right now on the right idea, but probably overdone short term. But I wouldn't bet against these funds. Who knows what kind of position they can put on? But
I've tried to short soybeans a couple times.
And I'm glad we got off on that tangent
against the funds.
I'm glad we got off on that tangent because it is an important distinction. Is why we do think it's going higher. This is almost every decision we make is based off the known numbers that we have, and that is a very fundamental view. But still, that catches the big trends. More often than not. It hasn't been easy this year, other than we knew demand was phenomenal. But you had tariff stuff early in the year, then you have Iran, and that's still ongoing in the oil price. And now we have Russia and Ukraine. So there's just a bazillion moving parts that can change overnight. It's still not going to be an easy market, but that's why we're talking about strategies simply like we've been talking about in this podcast.
Crude's down $3 today.
Yep, that's another thing. So what happens if Iran's resolved to some degree and the oil market starts coming off? Then the margins start going down in corn. And what if we're at 575 and then the ethanol margins start to go? That's where you start looking at protection and stuff. And that's the whole cycle of the bulls and the bears.
Yeah.
And
it's not as easy as just watch the corn market and read Twitter.
Yeah. I haven't seen, honestly, through this whole thing, I haven't seen one, and of course I don't follow everybody and I don't look at it. I haven't seen one really good take on the corn market in a very long time.
Do you think producers watch Twitter, or is that more us that watch Twitter?
I think that now a lot of people look at Facebook, Twitter, and a few daily update stuff. I think is where the majority of the information comes from where these guys trade off. I know my phones have gotten way quieter over the last 3 or 4 years, without a doubt, due to social media, without a doubt. But I'm also finding the marketing getting worse and worse for people I talk to, less and less. Not that I had all the answers. I'm not saying that. What I'm saying is they're getting analysis paralysis.
Sure.
There's just simply too much information, and it's really hard to know what to believe. And again, that's why I fall back to the USDA's numbers and not opinion, and where the USDA's numbers, I should say where the USDA's numbers are headed. You trade what they put out there and where they're likely headed. And it's not always easy to figure out, but, go back in the day in soybeans, when we're running 400 million, 500 million bushels ahead of the exports, they're going to raise exports. That's what I'm talking about, is they're running out of time. They have to make that adjustment. Same thing happens in corn or all these markets. But I would say this one was an easy one to see coming, but not an easy one to trade or hedge, early in. And weather does shift quick, and it could have rained 4 inches here in Minnesota and North Dakota and made a crop. It's never easy with the weather, but we got through enough weather, and there was enough people saying it's still going to be 184 or 185 that it was puzzling why they thought it was just as big as last year. Really puzzling.
Yeah.
After we saw a lot of weather.
Exactly. Well, John, we got to take a quick break for our sponsor, and when we come back, let's talk this cattle market.
Yeah.
This episode of Hedge Heads is brought to you by FM Bank. FM Bank, built for agriculture, with 6 locations across southern and western Minnesota, serving producers throughout Minnesota and the eastern Dakotas. At FM Bank, you're not explaining farming to a banker. You're working with lenders who actually farm themselves and understand the decisions you face every day. FM Bank's segregated hedge and marketing line program gives producers dedicated financing to execute marketing plans, manage risk, and seize market opportunities without tying up operating capital. From field to finance, Experience the advantage. Visit mybankfm.com to learn more. Member FDIC.
All right, welcome back, John. I am kicking myself a little on this cattle market because we talked about numbers, and I didn't bother to do anything about shorting cattle. And wow,
yeah, the attitude's shifted in cattle, and it is what it is. You talk about a market that went to a price where they couldn't use it. Packing plants went out of business. It's kind of it's a hot button topic. People are, no one feels sorry for these guys because they're the ones that caused it. But you're a producer, you raise a commodity, that's your living, you depend on the price. These guys can take their ball and walk away, and that's exactly what they did. Be it right or wrong, that's what's happening. Then you throw on what the president's saying about dropping the tariffs and trying to get the beef prices down. And it's just a mess, complete mess in cattle right now. We still don't have the numbers, but the market's adjusting the hard way to what we can do with these numbers for what the industry is willing to kill these cattle for. A complete and total mess. I'm in the camp that we're going to find this equilibrium now where we're going to find the price that works kind of for everybody. They're going to continue to fix the feeder live cattle spread, which has been way out of whack. That's getting fixed. We're going to find a price where it's selling really well and the packers make enough margin to where they're not shutting packing plants down. They don't have to make money every day, but we'll find that equilibrium. That's what the market is designed to do. What I don't like about it is the herd is not rebuilding in the U.S., and that's going to be the bulls' main argument. Unfortunately, in commodities, they will find a way to get the price down no matter what. And whether we're going to import our way that way, that's the way the market's headed right now. Whether we're going to do it a different way, I'd like to see it organically grown and herds grow here. Hopefully that happens, but that's not the direction all this stuff's going. Very weak. The board's been, tough to use as a hedging tool, and we were due for this cyclically. Like, this is going on 3 years, and you were going to see a big downturn. That was going to hurt. There was going to be feeders that were bought too high. But there's not too many cattle out there, so don't lose hope, cattle guys. Should you hedge these levels? Hey, if the numbers work, absolutely. If the numbers don't work, you're in the cattle business. You're used to that. I'm not saying it's good, but it's like, gosh. Yeah, there isn't a lot of choice here. That's why the herd's so low. Because
you bring up a good point though, because really the price is higher, but now you're back in the same situation as 3 years ago.
Yeah. Yeah.
I mean, which is tough.
Yeah, it is. So we'll find beef's coming up. Beef's going to be higher priced. So either the herd's going to rebuild to some degree or beef has to adjust higher. It's going to go through some growing pains. Unfortunately, the fun, good times are probably over for the guys that really deserved it, would be the hardworking ranchers. And it was a great run. But all commodities are cyclical. One way or the other, it'll find its equilibrium. And it's doing it the rough way. We're closing plants and saying we cannot kill cattle at this price. And then, of course, guys are going to get hurt in that whole process. But this is very normal stuff. Could we go to new highs? It doesn't seem like that's possible anymore because of what happened. You can't rule that out, though. There's guys that definitely say that definitely think that it's going to get tighter than it's ever been before, and we still haven't seen that tightness. There's anything I learned in cattle over the last 3 years is never say never in cattle. It's always been that way, but it really taught some lessons on what's possible in markets for how long. And again, back to a saying, markets can remain irrational a lot longer than you can remain solvent, and I wouldn't even say the cattle market was irrational. It was irrational what caused that. Just that. Right. Yep. Just driving the U.S. rancher out of business, making the margin so low.
On feeders that maybe there was some.
Yeah, and then
irrationality, at least at the barns.
We didn't even touch on the feed. Feed's factoring in the feeder cattle too. You're watching corn go up every day. That can't sit easy with the feeder margins that were already non-existent. So it's a mess in cattle right now, and I do think it'll. Here's my number, 208, 209. It doesn't mean anything. I'm just throwing that out there. That's where I think that we can maybe find fair value here and maybe work from there. I hope at least. More $3-4 away. So that's my magic number. I pulled it out of thin air.
We're $2 away in
it just
October right now.
It just seems like that's a logical point, but never, you never do know. But again, this episode wasn't to preach anything. It was, I want to stay positive. It's like, where do we go from here? This is why we made this podcast. We've had a couple years where it's very hard to talk about hedging because there's just been no meat on the bone. There's been stories, of course, but now we're going to get into the meat and potatoes of hedging and starting to separate, the better hedgers from the guys that will just go with the flow of the market. We do have some December 27th strategies that we're looking at very lightly. So if you want to know what we're doing there, give us a call. And obviously we have a lot going on with December 26th, March, May. We have spreads in corn, bean spreads. We have cattle spreads I've been looking at. And then, of course, all the option combinations that a guy could use, and maybe we touched on something that might be interest to you. You need to work with your guy and the banker, which is what we're working with FM Bank quite a bit, and it doesn't get any better than that. They're all ready to go with their marketing lines, and we're going to use them this year.
Absolutely. You want to hit anything on the outside markets, John? Because the Dow has been super interesting to me. I mean, the
slow slide.
The equities in general.
This is actually really important. You already hit on oil. That's starting to weaken up again. But what's been highly inflationary is the talk coming out of Washington. Bassett is talking about the quantitative easing, getting the rates down one way or the other, the easy way, the hard way. That kind of talk's very inflationary, and you have seen Bitcoin, gold, and silver moving up on that. And again, it spills over into the grains. A rising tide floats all boats. So the attitude is they're going to do anything to get longer term rates down, and that would entail us buying our own bonds. That's the only way you control the yield in the back end. They can control the short term rates, but the back end they do not control, but they did in 2008, and the only way to do that is quantitative easing, buying your own bonds. You buy bonds, and the price goes down, the price goes up, and the yield goes down. They move inverse.
Yeah.
So that is big news. That's affecting the markets. The stock market's a little confused on all this. It's
been opposite world, to be honest.
That short that you were making fun of me, I even made some money there.
Look at you.
Yeah. So that the inverse trade to John's stock market shorts did not work this time. But going forward, obviously the economy looks a little rocky. The numbers aren't good. Go check out the Walmart stock. That's never a good sign when you see that plunging. The fast food.
I liked your McDonald's factor.
Yeah, McDonald's, fast food, the Walmart are stuff to watch. And then, of course,
you're saying the faster you get through the line at the drive-thru, the worse the economy is.
It sounds silly, but in a town with 14,000 people that love McDonald's, there's a reason there's 2 drive-in lanes there and multiple parking spots for it. It's wildly popular. I don't think it's Ozempic. I don't think that it's the I'm going to get in shape deal. There's just simply hardly any people in line there. And that is very different than we've seen. And then, of course, the fail-safe one that guys have always said is the strippers in the strip bar, which I wouldn't know anything about.
I was just going to ask, have you been checking how the stripper economy is?
I have a couple friends that go there.
Do.
So I will I'll call them up. But that's always been the one that they say. If the strippers say that business is down, look out on the economy. So Walmart, though, is a big one. Go look at that stock chart. That's ugly. There's definitely cracks in the economy. I think everybody knows that inflation's roaring out of control, and people are feeling it.
You and I have felt that way for 4 years. And
we've been a little early on that one. Yeah,
a little early, so 4 years early.
When this collapses, I'll be on bragging about how we had this figured out. But
we called 9 of the last 0 collapses.
Other than we were not participating in one of the biggest run-ups in the last 4 years ever. Other than that, we were right.
I would say if there's one most common saying in this office, it's why have we not just bought equities every day?
Yeah, yep. It was buy cattle, sell wheat. That spread worked for years.
Oh man, that would.
Now it's been the opposite: buy wheat, sell cattle, and all we had to do is just instead of fighting the Dow or any of the Nasdaq or anything, just simply embrace the trend. Trend is your friend. What happened to that? What happened to that saying?
And I mean, we ignored it. That's for sure.
That is a fact. No, it just seemed like it was going to happen sooner than this. I'm not even saying it's happening, but boy, streets don't look busy, lakes don't look busy. You see a lot of pontoons, not seeing a lot of wake boats. Just little things like that are definitely noticeable. For me, it's the McDonald's line. Not that I'm in it, I shouldn't be in that. But driving by, it's really easy to see. It's just on a main drag from where we live, and you can always see who's in line there. It faces the main street highway. So you always can see the lines there. And wouldn't you agree there's always a line at that place?
Yeah, always.
Like, yes. And it's deep. It's people get angry, when you merge from the 2 lanes into the one merge. People get real angry there at that Y. But now no more. Fights no more. You can just go swing into Fergus Falls and go to the McDonald's. It'll be fairly open for you anytime in the lanes. But I think it is a sign of the times. I just think that people are wore out by inflation. I know I am. Every time you get a stinking letter in the mail, it's your insurance is going up in one way or another. Is it the house insurance? Is it going to be the real estate taxes? Is it going to be every single one's bad news every time? Isn't it?
I haven't got good news.
I don't even open them anymore. Why? Why open them?
Right. All right. Well, that was a bright, rosy way to end the podcast. Do you have any good thing? Maybe buy bonds. Is that what you're saying?
Buy bonds.
Look at buy bonds.
We didn't get
sell the dollar.
We didn't get a chance. We're going to talk copper today, but we didn't get a chance to. We forgot copper. We'll do copper next time.
So that's a good point because we're going to try. We did not last week, but we're going to try and add a midweek. We were doing the insider. We're now opening that to all. So we're going to try and do a midweek short, like a 10-minute episode. We can do one maybe just on metals. Hit the greens quick and maybe hit copper on that side on one of those.
And one more thing, we are starting a marketing club here very soon. It's going to be Fergus at the bank. We're going to meet in the morning. I think Tuesday mornings. We're going to finalize stuff here soon. So if you're within an hour here, which is it covers a wide swath of farming. We're in the Red River Valley or very near it. Give us a call and we'll give you details on when exactly we're doing that. I do plan on doing one in North Dakota, a little further away, maybe west of Fargo, and then also one further south in Minnesota a little bit, maybe towards. We'll figure that out. Anyway, I'm going to do a few different. Kids are grown up, they're off to college, and I have time.
It makes sense to be next to Lake Traverse, John. I don't know if you can get enough guys there, but we can fish that all year. I'm gonna try
to have the marketing club meetings where near I can fish. That's where it's gonna be.
I like it.
But anyway, if you're interested in that, give us a call. And then if it gets popular enough, you and I will do a web version of Marketing Club.
I love it, John on camera. That's hard to get.
Yep, I'm elusive.
Perfect. So not elusive by phone, though, only on camera. So why don't you leave your phone number?
Yeah, I like to talk. 218-731-1578. And again, for the insiders, really quick, that is definitely part of the subscription. You can call anytime and, and go over stuff.
And you got a letter coming out.
Yeah, I keep saying that, and the market keeps going up. So it was going to be how to reown the corn. Now it's gone how to reown the corn if it pulls back. So it's evolving.
Adjust some words.
It's being edited as we speak. You'll see that coming out soon too.
Sounds good. Thanks, John.
Sure.